Welcome back, everyone. So this would be the first technology presentation for the day, which would be running by Mr. Subhrajit Mukhopadhyay, who is the Executive Director, Edelweiss Tokyo Life Financial Insurance. The topic of the presentation would be Digital Journey of Life Insurance. Mr. Subhrajit is currently the Executive Director of Edelweiss Tokyo Life Insurance. He has a robust experience of over 2 years and a half decades in the life insurance sector. He has previously worked with organizations like LIC, Excite Life Insurance, with an interest in diverse subjects ranging from the risk management to product management. He is passionate about the evolving digital space, analyzing customer behavior, and leading a high-performing team. So, Mr. Subhrajit, it is over to you. Without any further ado, we'll start with the presentation.
Yep.
Yeah. Over to you.
Thank you, Hina. Thanks for your nice and kind introductions. Good afternoon, ladies and gentlemen. I hope you are all keeping safe in the current state of affairs and with your family, and ensuring that all the safety precautions are being followed. Last 1.5 years, it's something that completely changed the way you look at currently everything, and it helps us to reflect the many things that we have taken for granted and ask us to questions and so on and so forth. If you look at the insurance industry, I think there are 3 things that has happened broadly, and there are many others. Of course, learning how to make an audio video presentation is also one of them. But the key big things is that, I suppose, one is that definitely the insurance awareness has grown significantly over this period. People now realize the importance of the insurance, whether it's a health, life, or whatever kind of insurance. People understand the importance, and that has really significantly grown. The second thing that has happened is that insurers have started grappling with a surge in claims. I think whether it's a health claim, mortality claims, and so on and so forth. The phase 1 of the COVID didn't have much of a issues with as far as the mortality claims concerned. It has increased from the first level for the base level, of course. But I think the second wave has completely seen that there is a significant surge in the mortality claims in the second wave. And third is, I suppose, it pushed the insurance company to adapt digital on a much more accelerated fashion than it was going to do that. And I know I'm speaking to most of the insurance professionals, so you all of us are now pretty used to this consumer journey, digital, the application of digitals, and so on and so forth. So I will today I will share some of my observation as a practitioner and watching and working in the industry and observing the industry over the last 2 decades and how it has changed, and some of the things that some of the dilemmas that we are facing in today's world, especially the new age world with the digital and so on and so forth. So that observations will have primarily a digital and consumer journey, a little bit on the risk side, and finally moving to a more of a personalization approach. How do you go about personalizations on today's world? I think on the digital journey and digital customer experience, we are all grappling at various stages, at various phases, at a various evolving place, that how to ensure there is the customer journey becomes smooth, it becomes frictionless, it becomes convenient, and we are able to give a great customer experience both at the time of onboarding and subsequently at a servicing level. It also brings an important element of the customer acquisition as we do on the digital space. And although there has been a lot of progress in the customer journey and the customer experience over the last few years, and again it has again gotten much more significant push in the last year, especially when you talk about the onboarding. Many companies have moved completely a digital onboarding. There are a lot of opportunity to play out that. And when I look at the insurance space, especially the life insurance space, I know non-life is slightly ahead of in terms of customer experience, or in terms of digital adoption, in terms of users of technology. Non-life is ahead of life insurance currently, and no wonder the top insurtechs in this space is primarily dominated by the non-life space. 2 reasons. One is that there is a much more engagement with the customer in the non-life space than the life space. And secondly is also the availability data coming from the engagement. But having said that, I think the one of the challenges that we continuously see in the customer journey and onboarding or the experience piece, I think a kind of a bundling of two completely different process of operational process and the risk assessment. When you provide a holistic experience to the customer, it's important that both the processes are kept in mind and thought through. But sometimes too much of a bundling these two things leads to an inefficient process and inefficient approach, either from a risk management perspective or from a process perspective or from a customer experience perspective. Typically, a difference between a bank customer onboarding and insurance customer onboarding, that apart from the usual process of the KYC and other documentation that you require for an onboarding for a typical bank customers or some other financial institution customers, you require to assess a significant amount of risk on the onboarding process as well. To give an example, in the life insurance, we assume in the order of magnitude, though it's not, it depends on cohort to cohort, segmentation to segmentation, person to person, but on average, you assume from a 0.5 to 2 to 3 deaths per 1,000 in a year. So just see the probability. It's such a low probability event that 1 out of 1,000 is less than 1, 2 out of 1,000 is 0.1 to 0.2% basically. Given this, the probability is extremely low. Any misestimation of your risk assessment can lead to a significant increase in the significant dent in the bottom line and create some serious issue with the risk management. Now, now 1 become 2 means almost 100% differentiation from your expected results. So the risk assessment has to be extremely fine. Coupled with that fact that multiple cohort or multiple segmentation within a population exhibit different level of risk characteristics. Since it have a different level of risk characteristics across multiple cohort and varying from I can say 0.2, 0.3, 0.4 per 1,000 to 4, 5 per 1,000, which means the difference between the difference between the best and the worst, or in terms of mortality trend, can be as high as 10, 15, 5, 10, 15 times. So the pricing and the estimation of the risk has to be extremely nuanced to cater to such kind of a scenarios. And as a result, you need to ensure there is some level of underwriting or risk assessment happen. And how do I ensure that this happens while providing a great customer experience and not compromising the overall risk assessment? And that's where I suppose the important part of the digital and the data comes into play. And I'll talk about a little bit more in detail. These combinations with the help of a digital, we'll be able to see a lot of changes. When you look at a digital, there are 4 things that digital brings in. One is that the scale, it allows you to go for a scale at a much reduced cost, because the replicacy of creating a replicated platform on a digital space is much easier. It gives you significant computational abilities. I can tell you the machine learning is significantly based on a statistical theorem called Bayes' theorem, which is in vogue for the last 2-3 centuries. But we have seen the significant uses of Bayes' theorem in the form of machine learning is in today's world because of the ability to compute, the significant ability to compute. Similarly, the use of data, and I give an example on the risk. There could be multiple places I can use the data to refine my proposition, refine my risk assessment, refine my nudges, refine my recommendation, and so on and so forth. The uses of data, and of course, it can drive a behavior. In terms of customer acquisition, there are 3 fundamental things, and on the customer experience and acquisition put together, there are 3 fundamental things in the digital world. I think what I'm observing and I want to like to share with you is the uses of data science, that stroke machine learning, stroke analytics, however you wanted to put it, behavioral economics, and design thinking. One of the most important thing on this part is that the data science help you to identify a predictivity in terms of customer desire, intention, and outlook. So it looks at a particular cohort of people and say that whether some person would likely to behave in a particular fashion or not, what the characteristics they will exhibit, whether it's from a risk or preference or any other characteristics. Behavioral economics will help in terms of creating the appropriate nudges so that the person can be influenced and helped, or the person can be helped to take a certain decisions of purchasing an insurance, whatever the most important requirement. And design thinking ensures that the proposition becomes absolutely easy for the customer to approach, navigate, and take actions on. Design thinking, with a smart design thinking, will be able to ensure that all these inputs that coming out from the analytics and the data science models, as well as the behavioral nudges, behavioral economics, and the nudges, all cater to a seamless customer design framework, which helps to ensure that all these things are appropriately placed and appropriately taken care of. If all these things, and these are very important, I know many of the companies must be doing many of the things implicitly, but it's time for us to look at explicitly all these three elements and ensure the uses of all the things at an appropriate places, so that it becomes much more seamless and provides a great customer experience at the end of the day. So now, on that part, I would like to, on that journey, I would like to add a few things on how some of these things can help in reality. As I said earlier, that I will touch on a little bit on the personalization, is what is personalization and how it is evolving over the current space. The personalization journey has actually begun a long back. If you look at the typical marketing approach of customer segmentation, it's a little bit of extended form of a customer segmentation, extended form of personalization itself. So if you look at earlier, there used to be a single one size fits all product. Take it or leave it approach. So it's a from typical life insurance perspective, take a 20-year or 10-year endowment product for 10-year premium paying term and 10-year policy term, and so on and so forth. Over that period of time, that has become a more of a solution orientation. So as the industry has evolved, there has been a connection now started to begin. There is a product, there is a need, and there is a solution somewhere lying in between. The solutions that are lying in between are basically trying to give solutions to the specific to the person. So, for example, a particular person says that I wanted to take, and again taking a typical example from a life insurance, I have the ability to pay 5 years premium only. However, I wanted to take a 20 years policy term because my goal is 20 years down the line. That solutions or the product can actually created to ensure that that solutions is provided to cater to the need. So the creating a solution journey is actually moving towards the personalization by ensuring the individual requirement. However, the ultimate personalization, and when you ultimate personalization is to be understanding the context of the customer and provide the solutions which is relevant. And most of the OTT based platforms and the companies actually provide all this at a very significant, at a very superior level. So if you are looking for if you're looking for a very specific input, the personalized solution should be able to provide exactly the same. And no two persons can be the same. Since no two persons can be the same, no two solutions can be the same as well. So our journey is now moved from a so I think the segmentation approach and the cohort based approach will slowly go away, and that will leave us with the solutions which is extremely personalized, curated exactly to the requirement of the individual, and provide the solutions which will have a three important aspects. One is that it will be extremely gratifying for the individual to get a curated solution. That always enhances the well-being and attachment with the organizations, because it feels like that someone is actually caring for me and going extra mile to cater to my needs. It helps in efficiently pricing the product, because however refined the cohort based pricing it, there could be still heterogeneity in the risk. I'll just explain a little bit more. If you have 100 populations and 20, there are 5 subgroups. The 5 subgroups are likely to exhibit different risk characteristics. Currently, our approach is to do on a subgroup basis the pricing, but within the subgroups also there could be some differentiated, finer differentiated in terms of risk characteristics and so on and so forth. So having an appropriate and extremely personalized pricing, and I know some of this already started across globally, and as I say, some cases in the non-life insurance as well, will help us to price better. In a sense, a person who is deserving to get a better price should be getting a better price, otherwise he will move away. The organization will leave with only who doesn't deserve a better price. So as a overall organization experience will become worse, because the best people will leave, and not so good risk will continue. So that will help the risk management. And finally, it will help you to create a strong virtuous cycle, which ensures that you started getting more and more data from these offerings. And as you're getting more and more data, you can keep on updating your prices, you keep on updating your risk assessment, and so on and so forth. So it's gives it's a virtuous cycle. I think one of the examples is the Vitality and program from the Discovery, where they have actually started getting that. So that brings to the most important part of the digital is the data. And I think when you look at the data is abstract, data is challenging, and data is complex. But one thing is for sure, and people should significantly think about the data. One thing is for sure, and it's a repetition of a talk, that data is the next oil, and data is the core differentiation in our digital journey. So a digital journey of a personalization of providing a customer a great experience cannot happen without a backbone of the data. And for that, the important part is to realize that to collect the data and have the ability to retrieve the data without even bothering about the use cases that may happen. So always there is a bias at us that we need to know the data for who you know the use cases. I think it's not important to know the use cases. Again and again, you from Discovery, they have started collecting the data late 90s and late 90s, and that some of the data collections over a longish period of time without even knowing what the data would be used for helped to actually create some of this amazing predictive solutions, which creates, again, I say, it's a creative data flywheel and a virtuous cycle of getting better at every opportunity. I think so. That's the crux of the challenge. So data is the key. 3 principles of the digital applications, including data science, behavioral economics, and design thinking, are the key to the next level. And then the correcting as you go along is another important aspect. I think one of the great principles of the Bayes theorems, and which is also, as I say, part of the machine learning, is that it keeps on correcting as you get more information. In the today's world, I think the knowledge is not a sacrosanct, is not a permanent. I think our ability to correct and take new information and make the necessary changes as you go along is something that will make us to take to the next level. Finally, before I end, since I'm an insurance professional and working in insurance for a long time. And the most important part of an insurance is trust. We sell an intangible promise. We don't sell a real tangible stuffs. So it's extremely important that the customers, consumers have a trust in us and all our affiliated entities. So with the trust, the insurance industry actually is not the protecting the lives and aspiration of the consumers is not a reality. So I think we should continuously see that how we can build trust by helping the customers in providing the appropriate solutions and and ensuring a worryless protection to the consumer and their families. That's all from my side. Thanks for your kind listening. Thank you.
Thank you, Mr. Subhrajit. It was wonderful to listen to you. You have given a quite a very good glimpses of the digital journey of insurance and your personal experience also uh, through that. So thank you for your presence. It was a
Thank
wonderful
you.
address. I hope our audience would have loved this. So we're ending this. Now we will be moving ahead for a quick networking break. I would request all our audience to visit Map My India booth. Also, if you have any queries or you wanted to get into a discussion with any of our panelists, please, there is a option of Q&A given on the left side of the screen. You can click and drop your questions and queries there. Thank you so much. We'll be soon back after 5 minutes.